Hey everyone, welcome back to Corporate Decoder, the place where we break down the fancy jargon of big business to see if these companies are really worth your hard-earned cash. Today we've got something from Wells Fargo and Company, and let me tell you, it's got a bit of a juicy story behind it. Get ready as we dive deep into a settlement that could impact how this banking giant handles things moving forward. And hey, before we jump into the nitty-gritty, if you like getting these unfiltered insights into company filings, make sure you're subscribed and ring that notification bell. Also, we've got a fantastic community over on our Discord server. The link is waiting for you in the description below. So what are we looking at here? This filing is from Wells Fargo and Company, and it is dated the 13th of January 2026. Now, this isn't a standard quarterly or annual report full of a million numbers. Instead, it's a current report form 8K, and the main point is to announce something significant that has happened. The big news here is a settlement. Specifically, it's a settlement for a shareholder derivative lawsuit. Now, what does that mean? Basically, some shareholders acting on behalf of the company sued the company's current and former leaders. Why? Because these shareholders believed that the leadership's actions or inactions led to problems that hurt the company. So, what was this lawsuit all about? The filing tells us it relates to two key areas: the company's home mortgage lending practices and its hiring practices concerning diversity. Think about it, these are huge parts of a bank's operations. Home lending is a massive revenue driver. And diversity in hiring is something that's increasingly important for public image and potentially for avoiding future legal issues. So, Wells Fargo faced claims that their mortgage operations caused problems and that they weren't doing a good enough job with diversity in their workforce. These are serious allegations that can lead to big fines, damage to reputation, and loss of investor confidence. The fact that they've reached a preliminary settlement suggests they're trying to put these issues behind them. Preliminary approval means a judge has looked at the proposed settlement and thinks it is fair enough to be presented to all the affected shareholders. A final approval will come later after everyone gets a chance to chime in. While this report doesn't give us a ton of deep financial tables to dissect in the traditional sense, it does mention the different classes of securities that are registered and traded on exchanges. This gives us a snapshot of Wells Fargo's financial structure for investors. We see their common stock, of course, traded under the ticker WFC on the New York Stock Exchange. But then there are a variety of preferred stocks, each with specific series names like Series LYZ, AACC, and DD. These are essentially different ways Wells Fargo raises capital, often with different dividend rates and other terms. For example, we have the 7.5% non-cumulative perpetual convertible class of preferred stock, Series L. This tells us it pays a fixed dividend of 7.5%. It's non-cumulative, meaning if a dividend payment is missed, it doesn't get made up later. It's perpetual, meaning it doesn't have a maturity date. And importantly, it's convertible. That means holders can exchange it for the company's common stock under certain conditions. This offers a bit more upside potential than a regular preferred stock, which can be attractive to certain investors. Then we also see a guarantee listed for medium-term notes. This is essentially debt that Wells Fargo is backing. It's a way the company borrows money for its operations. This particular guarantee is for a series of notes due in 2028. It shows that beyond issuing stock, Wells Fargo also actively uses debt markets to finance itself. When we see these different types of securities and debt, it highlights the complexity of a financial institution like Wells Fargo. They are constantly managing capital, issuing new debt, paying dividends, and dealing with investor expectations across a wide range of financial instruments. Now, the actual meat and potatoes of the filing are tucked away in the exhibits. The most important one here is Exhibit 99.1, the Notice of Pendency and Proposed Settlement of Derivative Action. This document would contain the details of the settlement terms, what the company has agreed to do, and how the shareholders who brought the lawsuit will be satisfied. Unfortunately, the actual text of that notice isn't included in what we can see, but its inclusion here is the whole point of this particular 8K. And finally, as with most modern SEC filings, to raise the cover page interactive data file, which is basically a machine-readable version of the information for data analysis. So, what's the big takeaway here? Wells Fargo is facing the music on some pretty serious past issues. This settlement, related to mortgage practices and diversity hiring, is a crucial step in addressing these claims and hopefully rebuilding trust. While this 8K doesn't give us the usual financial statements, it signals a significant legal and operational development. It shows that even a giant like Wells Fargo isn't immune to scrutiny and that the financial markets and the courts hold them accountable. For investors, this means keeping an eye on how these settlement terms play out and whether the company can truly reform its practices. It's a reminder that past actions can have long-lasting consequences and that companies must constantly adapt to meet evolving standards in areas like fair lending and inclusive hiring. These aren't just PR buzzwords, they are fundamental to long-term sustainability and avoiding costly litigation. Alright, that is our quick decode of this Wells Fargo filing. What's your take on this settlement and what it means for the company? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more. And don't forget to join our Discord community through the link in the description for even more insights and discussions. Thanks for watching, and we'll see you in the next one.